Wednesday, January 11th, 2023, Maneco 64, home of alternative economics and contrarian views. Today we're going to look at the Swiss National Bank. It has embarrassingly lost $143 billion in 2022. Yes, almost 20% of Swiss GDP. Before I start, I'd like to thank all of you for the interest in the channel. If you're new to the channel, make sure you like my videos, make sure you subscribe and hit that little notification bell to be notified of all my new videos. I make a video every day. On Sunday, I do a live stream at 9 p.m. London time. So many of you, of course, know that I lived in Switzerland for about 5 years prior to moving to the UK in 1992. Yeah, I'm originally from Brazil, so I've lived around the world quite a bit. I've been here, though, for 30 years. So I still have family in Switzerland, so I'm always interested in what's going on in Switzerland. I started my career in the financial markets in Geneva, Switzerland. So about 6 years ago, I did a video on the Swiss National Bank because it's an interesting institution. I think it was founded in 1906, and I'm going to put it up in the cards. And the title of the video was "The Private Shareholders of the Swiss National Bank." Yes, the Swiss National Bank is kind of like a hybrid. It's part owned by by public institutions. As you can see here, the breakdown of share ownership as of December 31st, 2021. So you've got the cantons. They own about 59.3% of the bank. Cantons are like states in Switzerland. I think there's 26. There's a cantonal banks. They own about 18.29%. And then other public law corporations, institutions, they own 0.56%. So the public sector owns about 78.17%. And there are private sector shareholders. They own almost 22%. And as of 2021, the biggest shareholder was a German citizen called Theo Siegert from Dusseldorf. As you can see here, he owns over 5% of the shares in the Swiss National Bank. And the other interesting thing about the Swiss National Bank is that you could go and buy shares in it. It's traded in the Swiss Stock Exchange, and its market capitalization is 491 million. Yes, 491 million Swiss francs, which is probably about just over $500 million. The dollar right now is trading at 92 Swiss centimes or cents. So let's go through this story. I'm not making this up, of course. It came out on the 9th of January in Reuters. So let's go through it. Swiss National Bank posts record 143 billion loss in 2022. So we're going to go through it, and I'm going to tell you afterwards why the Swiss National Bank has gotten itself in this position. The Swiss National Bank posted an annual loss of 132 billion Swiss francs, or $143 billion in 2022. It said on Monday, the biggest in its 115-year history, as falling stock and fixed income markets hit the value of its shares and bond portfolio. A strengthening Swiss franc also had a negative impact. Monday's provisional figure, which marked a reverse from a 26 billion franc profit in 2021, was far bigger than the previous record loss of 23 billion francs chalked up in 2015. It is equivalent to slightly more than the annual GDP of Morocco. The S&B will release detailed figures on March 6th. It made a loss of 131 billion francs from its foreign currency positions, the more than 800 billion francs in stocks, bonds it bought during a long campaign to weaken the Swiss franc. Global stock markets weakened and bond prices fell last year as central banks around the world, including the S&P, hiked interest rates to combat inflation. The strong Swiss franc, it rose above parity versus the euro in July, led to exchange rate related losses. The only positive was the S&P's gold holdings, which stood at 1,040 tons at the end of 2021 and gained 400 million francs in value during 2022. The 2022 loss meant the central bank will not make its usual payout to the Swiss central and regional governments. It said last year the S&P paid out 6 billion francs, so that's the dividend. I guess the private shareholders are not going to get that either. Still, the loss is unlikely to have an impact on S&P policy. It hiked interest rates 3 times in 2022 as Chairman Thomas Jordan moved to stem high Swiss inflation, analysts said. So, you heard me say that there's a long campaign to weaken the Swiss franc. So that's what it's all about. The Swiss National Bank has had to keep up with the euro, with the dollar, with the pound, all the trashy fiat currencies. And it's done that by creating reserves out of thin air to buy hundreds of billions in stocks and bonds. It's reputed to own loads of FANG stocks, which are the tech-heavy NASDAQ leaders like Microsoft, Apple, and I'm not sure if they own Tesla, but Facebook. Yes, the Swiss National Bank basically is acting like a hedge fund. And don't forget that Switzerland had double that amount of gold that they have now up until 2000. And by law, they had to keep a 40% backing of their currency to gold. And that's gone out the window, of course. The Swiss basically were forced by the International Monetary Order, run out of Washington and London, I would say, to get rid of half its gold and to go off a sound money base. And it's been inflating ever since beginning of this century. And that's why the Swiss franc has had a reputation of being a safe haven currency, because it used to be that the Swiss National Bank only held gold and maybe some government bonds. So it's gone from being a very disciplined, sound money bank to being a hedge fund. And it's amazing that a bank that's actually publicly listed on the Swiss stock exchange and is only worth like $500 million has lost $143 billion and is still trading. If it was any other bank or any other company, I think its share price would be near zero. But seeing that they're holding over 1,000 tons of gold, which is basically not its gold, it's the Swiss people's gold, really, if you think about it, because the bank is owned mainly by the public sector, the cantons. It would be insolvent, and that's why it's really important to realize that gold is going to be used. As the head of the Dutch central bank said last year, they can use their gold holdings to reliquify their balance sheet, and I think that's why the Swiss National Bank is still operating. And how come the Swiss franc is still a good currency? Well, it's complicated. I think it could be because the Swiss national debt, the federal government debt, is still relatively low. It's only 47% of GDP. It's around just over 300 billion Swiss francs. And I calculated here as well, the loss in 2022 for the Swiss National Bank corresponds to $17,122 per capita. And that's the whole Swiss population of around 8.3 million, every man, woman, and child. That's how much they've lost for the Swiss population. And as I said earlier, it's almost 18% of GDP. So what about its gold holdings? Well, yeah, it's 1,040 metric tons, which is about 33.4 million troy ounces. So at today's price of 1882 in dollars, it works out to $62.9 billion. So you can see why the price of gold is going to become more and more important for the central banks. And I would say that they're going to allow gold to continue to unwind. And what do I mean by unwind? Well, they're going to take the the control that they have over the price of gold through the bullion banks, using the leasing mechanism where they rehypothecate the amount of gold they have many times over to control the price. They're going to lift that gradually and let the price rise, because I don't think the environment for stocks and bonds are going to improve in the next decade, and the central banks losses are going to continue to pile on. Yes, we might have a rebound in the stock and bond markets temporarily, but longer term, as I've said quite a few times in the last 2 to 3 years, the bull market in bonds or the bear market in interest rates, which makes all this everything bubble possible, is over, in my opinion. We had 40 years of that, and things don't, they're not linear, they're cycles. And I would say it's going to be decades and decades until we see that reverse. So who's paying for all this? Well, it's going to be the Swiss taxpayer, not just current taxpayers, but future generations. I bet you that national debt is going to continue to rise. I bet you a lot of the dividends that the Swiss National Bank used to pay to the cantons, that's going to disappear. The Swiss people, unfortunately, are going to become poorer. That's all it is. Their currency is going to continue to debase. Yeah, we're going to continue to see inflation, and we might even see taxes rise in Switzerland, not just at the local canton level, but at the federal level. So it just goes to show what happens to a country's economy, money, and finances once you go off a sound money footing like the Swiss did about 22 or 23 years ago. And that's a big shame. So again, that's the reason why, yeah, the Swiss francs, they're colorful banknotes and everything, and they're issued by the Swiss National Bank, but they're not what they used to be. Just to let you know, holding Swiss francs is a mug's game, just like holding US dollars or British pounds or euros or Japanese yen or any other fiat currency. So with that, let's quickly look at where the markets are this morning. It's just gone past 8 a.m. London time. We've got spot gold at 1882. The high's been 85 and the low's been 72. So looks like gold is climbing a wall of worry slowly but surely here in the last few days. I guess CPI is out tomorrow, so the markets are still waiting for that. Silver this morning or overnight is actually risen quite a bit. We're up about 31 cents at 23.90. It's up 1.3%. Excuse me. High's been 23.96. Low 23.54. Stock market, the Dow futures is up 15 points. NASDAQ is down 18. S&P is unchanged. To the currencies, we got sterling unchanged, 121.60. The euro is up slightly here, up 0.1 at 107.44. The dollar is up 0.1 versus the yen at 132.38. Dollar's down slightly versus the Swiss franc, 92.17. The dollar is unchanged versus the yuan at 6.78. Let's check the ruble, see what the dollar is doing there. Yeah, dollar is at 69.50. So yeah, the dollar seems to have topped temporarily here versus the ruble. To the other currencies, we've got the Aussie dollar up 0.2 at 69 exactly. The dollar is unchanged versus the Canadian dollar, 134.31. And the Kiwi dollar is unchanged as well. So the markets seem to be pretty unchanged, except for gold and silver this morning. Let's look at the commodities here. We've got Brent down about 0.25%, trading around 80. WTI crude is down 0.5% at 75. Let's have a look at platinum. Platinum is up $10, trading around 1,090. And high-grade copper continued to rise here, up 0.5% at 410. And U.S. nat gas is up 1% at 351. Finish off, we'll look at the bond markets. We've got the 10-year yield down 5 basis points at 357. The 2-year is down 4 at 421. And the let's check the gilt market. Yeah, yields are down in the UK as well, which is positive for bond prices. The 30-year gilt yield is now back below 4%. We got above 4% yesterday. And we'll look at some of the questions now from last week. Yesterday we did 3. We'll do another 3 today. This is from after 2022. We need to batten down the hatches video from last week. Brigitte H asks, Mario, I appreciate your opinion. Is it better to buy silver, gold coins, legal tender, as opposed to bullion to avoid capital gain tax in the UK as thresholds are falling as of April 2023 and also 2024? Yes, Brigitte, definitely you need to buy legal tender, i.e. sovereigns or Britannias. They would avoid capital gain tax thresholds, and they're falling from, I think, 12,000 to like 6,000 and then 3,000. So they're coming after your capital gains in the UK. Number 5 from the same video from Steve in Stamford. So I have properties, gold and silver, and lots of cash out of the bank, still looking for other areas to place my cash. What about a boat? I think it's a great idea, a boat. My father used to be a keen yachtsman, and he loved his boats. I'm not into, well, I used to sail when I was a little boy, but here in the UK, a boat where I am is not really convenient, but I would say it's a good thing. Depending on the size, you can even use it to get away with your boat. Who knows? Oh yeah, I would definitely think a boat is a good asset to have. One thing you need to know about boats, they take a lot of maintenance depending on their size. The bigger they are, the more money you're going to be spending keeping them, boats in good shape, because it's important seeing that you're going in the water with them. We'll go to question 6 here, the last for today. It's from the video. According to Greenspan, Fed would pivot prematurely to save Wall Street. This is from Marcus Frey. And he says, isn't it a must that the amount of currency in the market has to grow proportional to the amount of goods and services and people in the market in order to keep the market system in balance, to stay alive, served by the fluid of its blood, which represents the currency. Doesn't this implement to print sufficient currency money in order to stop a market by deflation? Wouldn't it mean in the case of a gold standard, the price of gold has to rise accordingly? In conclusion, can it be that the Fed has always just printed as much money that is sufficient to keep this regular circle stable? I don't think so, because in a gold standard, the price of gold doesn't matter. It's the price of goods and services and everything else that revolve around gold. And yes, and gold historically has the amount of gold in existence, and even silver to some extent has equaled the growth in the population of around 2 to 3%. I would say you're trying to say that the Fed and the central banks aren't doing the right thing by printing as much as they do. But if they had kept money supply growth stable to get the wheels of the economy, or what you call the blood stream of the economy going, we wouldn't have debasement of the currency, because the growth of the economy, growth of goods and services would keep up with the growth of the currency, and we wouldn't have the debasement of the currency. You'd still be able to buy as much as you could 50 or 60 years ago. So, and historically, gold is known to have done that. Back in the 1800s in the UK, we were under a gold standard up until 1914, and there is zero inflation. And you can check the Bank of England calculator for that. So there you go. I wish you all a great rest of the day. Take care. Bye.